Welcome everyone to today's daily macro update for Wednesday, April 2nd. Today is the quote unquote liberation day where Trump is going to announce momentarily here in the next 28 minutes what the final announcement is for these reciprocal tariffs that are set to go live after hours today. So we're going to be getting into that as well as some of the labor data that came out today for the ADP report. And then as well, we're going to be covering a lot of the different charts that we like to take a look at here into the close. As always, if you guys have any questions, make sure to leave those in the comments below and we can go ahead and get to those. So taking a look at the S&P 500 here, we're having a little bit of a bounce, not really too much. I mean, the market is pretty much awaiting the tariff announcements just to see how bad it is. Because again, we won't see the true effects of them probably for, a couple months. But it's clear that these tariffs are going to be inflationary. They're going to be stagnant to growth, at least initially, according to this administration. And we'll see what happens from here. Obviously, if it's something that is less bad than is being priced into the markets, that's going to be a positive reaction and vice versa. So, I mean, obviously the worst case scenario is trying to be priced in right now. But what is interesting is that, we have things like oil. So if we take a look at a price of oil here, this is having an interesting acceleration alongside a lot of different commodities that are also accelerating at the same time. Although, we are getting some manufacturing data that continues to show prices accelerating while new orders are declining, which is evident of the stagflationary environment that we're about to head into. But also as well, when taking a look at something like Bitcoin, right? So interesting how Bitcoin is having a little bit of strength come back in here, right? And this is a lot different from what we typically see in an environment where we see both growth and inflation slowing at the same time. Because pretty much, Bitcoin does well in most cases except for that one, which is why it's been doing what it's doing over the past few weeks. And so, not saying that we're about to have a face-ripping rally in Bitcoin, but I mean, when you take a look at volume here, you can see that volume and consolidation is happening. And so I wouldn't be surprised if we see a move in Bitcoin soon here. So it is interesting, though, how it held around this mark here and how this move up is on accelerating volume. So we'll see what happens there. Typically, if Bitcoin does have a resurgence in price, that means that we might have a shift that is happening. So, cryptocurrency or Bitcoin's having some interesting moves here. Not saying that it's bullish, it still is in a bearish trend. But that, along with commodities, as well as bond yields, when taking a look at the 10-year US government bond yield, that isn't falling out, but it definitely has been declining. And so, this could be showing that that growth is typically slowing and not so much, inflation. So even though we do have inflation slowing in the next month, that along with, let's see what else here. That's pretty much what I'm seeing in terms of a potential trend shift. And then when looking at the 30-day macro correlation, the 30-day rolling macro correlation versus the S&P 500, you can see a little bit of a change here, right? So a lot of these different assets, I know it's a little bit hard for people to see on mobile. And for those who are on TikTok, if you'd like to watch and see what charts I have up on my screen here, you can go to our YouTube channel or you can go to our Instagram page. But when taking a look at this rolling 30-day macro correlation matrix versus the S&P, we can see that the correlation between gold and the S&P has flattened. And also as well, we're seeing that we're having a decorrelation between the S&P 500 and oil, treasury bond yields, as well as commodities. The U.S. dollar and the S&P do remain highly correlated here, but we're seeing pretty much a drop off, the beginning of a slowdown in correlation with oil, treasury bond yields, and commodities. And so this to me is showing how we could be entering a rising inflationary environment. So not to say that a trend shift has happened, but this is what we are looking at here. Can you put up a short video as soon as the tariff news comes on? Yeah, we're going to be, after I go through this, we'll take a look and I'll find the hosted video where we can watch live together. Going into some of the macro data here, we got the ADP non-farm payrolls. This is actually the pay exchange, which decreased. So that is actually disinflationary, but let's go to reports, jobs. Yeah, so the ADP National Employment Report showed that there was 155,000 jobs added in the month of March. The chief economist over at ADP, Nella Richardson, said, despite policy uncertainty and downbeat consumers, the bottom line is this. The March top line number was a good one for the economy and employers of all sizes, if not necessarily all sectors. Now it's her job to make it seem as great as possible. So, I'd be doing the same thing if I was in her role. But when diving into the exact numbers here, because again, we like to look at the rate of change on this channel, you can see that it is actually quite positive. So pretty much since August of last year, the rate of change, the annual rate of change for non-farm payrolls, according to the ADP, has continued to accelerate. It accelerated for about 5 months in a row before it leveled off, and then it just had a reacceleration to its highest point since August of 2023. So that is a positive rate of change, although it's not a truly impressive one, right? So it's only a 1.4% move. And so it's been rising, but really not improving that much. Let's say, if we go back 10 years, obviously, the pandemic saw a huge drop off in ADP and then a large acceleration in 2021. But normally the average, like if we go, let's go even back further than that. The average was, around like 2% annual increase, 1.7. So it's inching up towards that more and more, but it's still technically below the pre-pandemic average. And one thing that I also like to notice here is look what happened like before the pandemic. Before the pandemic, essentially, almost an entire 12 months before the pandemic happened, look at this large decline in non-farm payrolls. It's interesting too that, we also had a yield curve inversion before the pandemic. And so when you take a look at the lead up to the pandemic, why was there, signs a whole entire year before the pandemic happened where we started to see large declines? Now, this is my viewpoint only, not even my other teammates' viewpoint. This is just myself. And I'm going to put my tinfoil hat on here for a second, but looking at where growth was going from 2019 into 2020, we were actually headed towards a recession. And I think, COVID was a convenient bailout of that deceleration, accelerating into something really bad. I think that there would have been a recession either way. But that's getting a little bit off tangent here. Taking a look at the year-over-year rate of change between large companies with 500 or more employees versus small companies between 20 to 49 employees, you can see that small companies have pretty much remained flat since May of last year in 2024, while larger companies with 500 or more employees continue to accelerate. So those are really the people who are hiring right now, are the super huge corporations, larger companies. So that's really where you're seeing most of the jobs and most of the hiring. But you have to remember that, 50% of the entire economy is built off small businesses. And so if you just take a look at hiring in small businesses, you can see that they're struggling, and you can look at it in other metrics too. Going on over to non-farm payroll for construction, this number is, starting, it leveled out from September till about December of last year. And then since the start of this year, it started to decline here a little bit. So we have to pay attention to construction employment because that is a leading indicator of the economy. And then conversely, looking at the employment situation for manufacturing, even though that's still negative year over year, that has been accelerating from its trough back in May of last year. And so that is a positive improvement for manufacturing, but it's still negative year over year. So all in all, from the ADP report, it seems as though the labor market stopped getting bad. So it seems as of right now, it's, softened, but it's stopped its softening. So that's what I'm looking at there. Obviously, yesterday, we got the GDP nowcast, the updated one. The next update is tomorrow, April 3rd. That came in pretty low based off of the ISM manufacturing PMI that we covered yesterday. If you guys haven't watched yesterday's video, I recommend that. But the ISM manufacturing index decelerated back into contractionary territory for the first time since I think it was like November or October of last year. And we had prices go up. So the prices being paid by manufacturers increased while the number of new orders declined. So demand slowing, prices increasing. Not great. And then this went to the lowest estimate in quite some time. And it even went negative, deeply negative for the alternative model forecast where it excludes gold imports and exports. So yeah, that is definitely an issue for growth and not a great start for the first quarter of 2025. And the bond market still expects that something's going to happen between now and June because the target rate probability for the Fed meeting next month in May, on May 7th, there's an 85% chance that they're going to keep pausing. So that's pretty hawkish in the near term, but look what happens in just 1 month. It flips. It goes from, extreme hawkishness to extreme dovishness in just 30 days between May and June. So the question is, what is the bond market pricing in between May 7th and June 18th, where it's like, this is where things get a little bit shaky. That's why it's good to pay attention to the bond market, because again, the bond market is a lot larger than the stock market. A lot of people just like to think that the stock market is forward-looking, which it is. But the currency markets, as well as the bond markets, are even larger than the stock market and are way more forward-looking and are typically more correct than the stock market. So that's why my team and I like to pay attention to that. But yeah, so it's interesting how it's pricing in something in that time frame here, and that something is going to happen. A couple of tweets that I really like to look at. One is this one here. So the tariffs that are being put on right now, in summary, this is not the same as Trump 1.0, right? So during Trump's first term, he imposed I think it was a 10% tariff on China, but it wasn't rolled out all at the same time. It was pretty much dispersed throughout a couple of years. And so the tariffs that are happening now are much larger on China, as well as they're in other countries that are much larger. And it's happening all at once, right? It's not like they're spreading it out, the ramp up. And so this is different than, this is a different tariff situation that the U.S. has, put on with the rest of the world since the 40s. Jim Bianco over at Bianco Research, if you guys don't follow him yet on Twitter, highly recommend. The guy is very smart. I definitely aspire to be like him one day. But he put this interesting chart looking at the average tariff rates on U.S. imports. And this goes all the way back to 1821, believe it or not. So What's interesting is if you look all the way down in the bottom right-hand corner here by my face, um, it shows Trump's 1.0, which did accelerate, and then it came down a little bit with Biden. Remember, Biden kept a lot of the Trump tariffs in place. He did reduce some of them, but he didn't get rid of all of them. And then this, what he's about to announce here momentarily in the next 13 minutes, is estimated to be total an 8.4% tariff on all total imports. And this has not been realized, pretty much since the General Agreement on Tariffs and Trade in 1947. So we're going back a long time, ladies and gentlemen. So this is definitely a different environment from what we've been used to, and that's really what the issue is with the market trying to price this in, because it's over what, 70 years, over 75 years since we've been in this type of tariff regime. And that was back then where debt wasn't as large and the economy wasn't as large, right? Everything is relative, so you could probably get away with higher tariffs back then. But yeah, this is very disruptive. And so what you can do is you can always just take a look at what the market is pricing in. And so, taking a look at the dollar, interesting drop off from its lower high here at 104. So the dollar is continuing to decline. We also have, like we mentioned before, bond volatility is increasing. 10-year government bond yield is increasing. And guess what happened for the first time? Credit spreads widened to 3.5 for the first time since August of 2024. This is not a risk-on environment. Volatility, even though it has been coming down a little bit here over the past couple trading days, it's still above 20. And so you don't want to be taking huge risks within equity markets currently, right? What's been a little bit better, even though volatility has spiked a little bit here, is in gold. And so as gold remains in bullish trend, you want to take advantage of any dips. We already talked about cryptocurrencies. We already talked about oil. So the setup here is the market is having a lot of trouble pricing in what these tariffs are going to do, right? Taking a look at the S&P 500 here, it's having a bit of a bounce. We'll see where it closes. It's still struggling on volume, though. So volume has dropped off significantly over the past 2 days, and we need to see what happens from here. But it is interesting how it didn't close below 540 or 550 SPY. It tried twice and it didn't close below that. So that is a positive rate of change in my view. But the majority of mega caps remain bearish. The S&P 500 still remains bearish. And there are some US sectors that remain bullish that we were talking about in our macro investing community this morning. So for our community members, you guys know which ones we were looking at, and you guys were prepared for those. But there's a lot of opportunity as well in foreign equity markets. So let's just take a look at the Eurozone real quick. So looking at the European stock market, Euro Stoxx 50 index, this does remain bullish, having a little bit of a drop here. But this could be an opportunity to buy. Again, for those who are in our macro investing community, you guys know what we did here. And so if you guys are interested, as always, to start your macro investing journey, I would highly recommend starting your 7-day free trial of our macro investing community by going to the link below. For those who are on YouTube, you can go to the description below and check out the 9-minute video that goes through all of our It basically goes through our entire process, shows you what's involved. But there's training, exclusive macro reports. Every single morning, I have an exclusive 5 to 7 minute preview, pre-market of what I'm going to do for the day, so that I'm only posting those videos in there for the members. But if you guys want access to that, click on the link, check out the video here, see if it's for you. If so, I will see you inside. But with that, let's go ahead and go and answer any type of questions that you guys might have here. And then we can try and find the video. We'll try and find the video for Trump's speech here. So yeah, let's first take a look at the Instagram comments. Can you kindly look at the DAX? Sure. The DAX is bullish. What do you do here? Can you put up a short video as soon as the tariff news comes on? Yeah, and it's supposed to be announced in 7 minutes. So let me just go through some of these questions and we'll try and find it. If anyone has the link to it, just send it to me. I'll bring it up. Why don't you think investing/trading can be done as a full-time career for retail investors? Too volatile? Has algorithmic trading by hedge funds made it less viable? Michael _Tonini. I mean, it can be done, but if you really want to be, I mean, that's what wealthy people do, right? They essentially live off of their investment income. For you to do it as like trading income, you could do it. It's not guaranteed, obviously, or it's not stable at all. So, I mean, it's kind of like a cowboy type of lifestyle. But typically, the people who are successful doing investing and trading as a career is they're starting out with a very large portfolio, and they're getting anywhere between like 1 to 2% a month, which are the types of people that we actually help in our partnership circle. Usually they have, high 6 and 7-figure portfolios, and some of them are retired or getting ready to retire. And so if you have that type of portfolio size, yeah, I mean, you could totally live off of your investments. But if you're trying to start out with $100 and scalp trade with leverage, that's a little bit tougher to live off of. But good question. Can you take a look at SOX? Semiconductors are bearish. What do you think of Tesla? Tesla's bearish at the moment, bearish trend. All right, let's try and find the speech here. Not seeing it on the White House website. Let's see. See if we can just find it on YouTube. If anyone has a link for me, I'm more than happy to see if I can find it here. Okay, it looks like I may have found. I'm bearish on Apple. Stock market is also at all-time highs. Economy has been shaky. I mean, yeah, it's close to all-time highs, sure. Bearish on Tesla. How can we short tariffs? I don't know if you can short tariffs. I'm trying to find it. 1 second. Let me see which one's the best one. One second, everyone. Just trying to find the best link that I possibly can here without too much commentary. Here we go. I think I found it. All right. We're going to choose this one. Let me stop the screen. Let me know if you guys can hear the sound. I'll try and have it as loud as possible. Let's see. Hey, Johnny, I switched to YouTube. This is really nice. Thanks. Question: what about the rollover risk of U.S. debt that you spoke about? Was Trump discouraging market run-up? Was Trump discouraging market run-up to mobilize funds into debt? Possibly. I mean, he's trying his best to try and get down the 10-year. So, yeah, we'll see what happens. But yeah, I mean, that's a great question. I would probably say that the bond market is clearly pricing in some risk there. Akash Vasisht. Hopefully I didn't butcher your last name there. Look at all those people in construction helmets. Do you think those are paid actors? We all know Trump is about theater and optics. Let's see. Thank you, sir. Your input is much appreciated. It's on ABC. I think that's what we got here, right? We got something going on. Do you think the recent negative GDP revisions are a significant bearish development? I mean, the negative GDP revisions are just based off of the real data. And yeah, I mean, the real data has been negative, you know? So I want to be able to continue to look for signs of actual inflation coming back, because in our model, we have inflation coming down. And so, you know, if we do get a lower inflation number next week, then I wouldn't be surprised if you actually have a positive rally, which, you know, that would bring everything back to the top end of its range. That would suck a lot of people in, you know, before it goes lower. Because again, what the market is looking for is stronger, or not stronger growth, but at least accelerating growth with lowering inflation, right? It's trying to find that narrative of a soft landing. And so any type of data that we get that supports that soft landing narrative, that's really what's going to get the markets to push higher for a potential next leg up. if that makes sense. And so when you guys are looking at data, when you guys are looking at the charts, you have to think in the back of your mind, are we getting data that is supporting that soft landing narrative? And so far we have not, right? Stagflation is the exact opposite of the soft landing narrative. So yeah, let me know what you guys think of that in the comments below, but that is pretty much how I'm thinking about it. Google is also in bearish trend. That's pretty cool. I didn't realize in the streaming platform I can bring up people's comments. Marty says, full glaze. Appreciate it, Marty. Johnny deserves to have hundreds of thousands of followers for the quality he's always dropping. Well, thank you, Marty. Appreciate it, brother. We'll get there one day. Not no rush though. It'll happen as it happens. We're here to help the people who are here. And the goal is not to try and become famous. The goal is to just try and stay ahead of these markets as much as possible and to create a community of people who want to do that together. How do you have a soft landing when there's no landing gear? Yeah. Well, yeah, that's also true. The no landing scenario where you just keep on flying. Yeah, Jim Bianco is also the one who coined the no landing scenario. But people's heads are perking up here. So maybe it's starting here soon. What time is it? 4:04? Hasn't really started yet. Will oil and natural gas raise inflation for the next CPI? Well, in terms of oil and natural gas, they are a big part of the energy component. So, headline inflation, sure, it wouldn't touch core inflation. Remember, because core inflation, which is arguably what the Fed looks at more, that actually excludes energy as well as fluctuations in energy as well as food prices. So it might affect headline inflation, but not core. But you also have to remember that any type of moves in the price of oil typically front run the CPI numbers by about 6 weeks, right? So, for example, if like in the month of January we saw a large acceleration, we wouldn't see that in the actual CPI report until the March print, because a spike in oil in January affects inflation that's felt in the next 6 weeks or so. And then that doesn't get reported until the next month. So you almost have like a 2-month lag where it doesn't get reported whenever you see spikes in oil. And we'll go to the charts to look at that because I think it's important. But that's what we typically see. What do you think about the tariffs and how they affect America? I'm really not sure yet. I mean, asking that question is trying to have me answer a question to essentially something's happened in the market that we haven't seen in 75 years. What do you think? It's like, I don't know. We're in a totally different regime and economic structure. So, we'll see what happens. How do you prepare for these daily/weekly sessions? I don't. I just talk about what I'm looking at every single day and that I'm doing research on for our communities. So not much preparation. Attendance check from Thailand. It's 3 a.m. NT, welcome, brother. Didn't Trump levy tariff? Yes, but not as much.
Thank you very much. Thank you. Nice crowd. What a good-looking group of people. Well, we have some very, very good news today, and a lot of good things are happening for our country. Please sit down. My fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed,
Why is it blurry?
and the day that we began to make America wealthy again. Going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steelworkers, auto workers, farmers, American steelworkers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple. Can't get any simpler than that. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. With today's action, we are finally going to be able to make America great again, greater than ever before. Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. And ultimately, more production at home will mean stronger competition and lower prices for consumers. This will be indeed the golden age of America. It's coming back. We're going to come back very strongly. We're pleased to be joined on this momentous occasion by Vice President J.D. Vance. J.D., thank you. Thank you. Thank you very much. Where are you, J.D.? No, that wasn't too hard to find. I was looking, he likes to take a low-key attitude, so it'd usually be sit right in front. He's gaining a lot of confidence, Mike, isn't it? And nearly my entire cabinet is here, as well as Speaker Mike Johnson, who's done an amazing job. And with the great success we had last night in Florida, we have a majority of 7. And 7's like a lot when we had it at 1, right? You've done a fantastic job. And many of the members of the House and Senate are with us. Senators, congressmen, thank you all for being with us. We appreciate it. For decades, the United States slashed our trade barriers on other countries, while those nations placed massive tariffs on our products and created outrageous non-monetary barriers to decimate our industries. And in many cases, the non-monetary barriers were worse than the monetary ones. They manipulated their currencies, subsidized their exports, stole our intellectual property, imposed exorbitant VAT taxes to disadvantage our products, adopted unfair rules and technical standards, and created filthy pollution havens. They were absolutely filthy, but they always came to us and they said, we're violating, we should pay for it. It's all detailed in a very big report by the U.S. Trade Representative on foreign trade barriers. And I'll just hold it up for you. It's available, and you don't have to pay too much. As I understand it, you'll pay nothing. It's a lot of work for something, actually, because it's a special book. It's very, frankly, it's very upsetting when you read it, when you see what people have been doing to us for 30 years. This all happened with no response from the United States of America, none whatsoever. But those days are over. Let me offer just a few examples of the vicious attacks our workers have faced for so many years. The United States charges other countries only a 2.4 tariff on motorcycles. Meanwhile, Thailand and others are charging much higher prices, like 60%. India charges 70%. Vietnam charges 75%, and others are even higher than that. Likewise, until today, the United States has for decades charged a 2.5 tariff. Think of that, 2.5% on foreign-made automobiles. The European Union charges us more than 10% tariffs, and they have 20% VATs, much, much higher. India charges 70%, and perhaps worst of all are the non-monetary restrictions imposed by South Korea, Japan, and very many other nations. As a result of these colossal trade barriers, 81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that, friend and foe. And in many cases, the friend is worse than the foe in terms of trade. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. Thank you. Brian, I'd like to have you come up here for a second, okay? I just see him sitting. He's been a fan of ours, and he understands this business a lot better than the economists, a lot better than anybody. Brian, say a few words, please, would you? Thank you. It's a great honor to have you. Thanks.
Thank you, Mr. President. I grew up just north of Detroit, Michigan, in Macomb County, known as the home of the Reagan Democrats. My first vote for president was for Ronald Reagan. I thought that was going to be the best president I ever saw in my lifetime until Donald J. Trump came along. I have watched my entire life, I have watched plant after plant after plant in Detroit and in the metro Detroit area close. There are now plants sitting idle. There are now plants that are underutilized, and Donald Trump's policies are going to bring product back into those underutilized plants. There's going to be new investment. There's going to be new plants built. And the UAW members, and I brought 20 of them with me, they're sitting right over here. We support Donald Trump's policies on tariffs 100%. So, Mr. President, we can't thank you enough. And in 6 months or a year, we're going to begin to see the benefits. I can't wait to see what's happening 3 or 4 years down the road. Thank you, Mr. President.
Thank you. What a great guy. He got it right from the beginning. He got it before almost anybody else. This group over there, they got it too. And, you know, we won the state of Michigan. We won almost all of them. But we won Michigan by a lot, and I want to just thank you all. The auto workers were fantastic. The Teamsters were fantastic. Everyone was pretty good, I will tell you. Thank you very much. I appreciate it. You're going to be very happy very soon, and you probably see what's happening with all of the, not only car companies, but car companies in particular. See it with all of the ones they're moving, they're announcing day in, day out. You're seeing it. Nobody's ever seen anything like that. With today's actions, we're also standing up for our great farmers and ranchers who are brutalized by nations all over the world. Brutalized. Canada, by the way, imposes a 250 to 300% tariff on many of our dairy products. They do the first can of milk. They do the first little carton of milk at a very low price, but after that it gets bad, and then it gets up to 275, 300%. So when they're figuring what's Canada charging, they say, oh, about 2%, 3%. But take a look at what happens down the road. When you look a little bit, it's not a pretty picture, and we don't like it, and it's not fair. It's not fair to our farmers. It's not fair to our country. And with countries like Canada, you know, we subsidize a lot of countries and keep them going and keep them in business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say, you got to work for yourselves, and you got to, this is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years. And we're really not taking it anymore. Through non-tariff barriers, the European Union bans imports of most American poultry. You understand? They say, we want to send you our cars, we want to send you everything, but we're not going to take anything that you have. Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting
I think
at
American beef
midnight
has
tonight, I would say.
For other countries.
And China charges American rice farmers an overquota, it's called, a tariff rate of 65%. South Korea charges 50. Actually, they charge different, from 50% to 513%. And Japan, our friend, charges us 700%. But that's because they don't want us selling rice, another thing. Who can blame them, Madam Secretary? Agriculture, great job you did on eggs, by the way. The egg prices came down 50%. You got them down 50%. Once we got involved, they were going through the sky. The egg prices, they were going through the sky, and you did a fantastic job. Now we have lots of eggs, and they're much cheaper, down about 59% now, and they're going down further. We charge 2.8% for so many things that other countries are charging 200%, 300%, and 400% for. If imposing tariffs and protective barriers made nations poor, then every country on earth would be racing to eliminate these policies, and China would be the first on line. They run a very strong country, but they're not first in line, and the American people are paying a very big price. From 1789 to 1913, we were a tariff-backed nation, and the United States was proportionately the wealthiest it has ever been. So wealthy, in fact, that in the 1880s, they established a commission to decide what they were going to do with the vast sums of money they were collecting. We were collecting so much money so fast, we didn't know what to do with it. Isn't that a nice problem to have? What do you think, Marco? Good problem? Marco would love that problem. But we don't have that problem anymore, but we're not going to have it very much longer, I will tell you. But they collected so much money, they actually formed a commission to determine what they were going to do with the money, who they were going to give it to, and how much. Then in 1913, for reasons unknown to mankind, they established the income tax so that citizens, rather than foreign countries, would start paying the money necessary to run our government. Then in 1929, it all came to a very abrupt end with the Great Depression, and it would have never happened if they had stayed with the tariff policy. It would have been a much different story. They tried to bring back tariffs to save our country, but it was gone. It was gone. It was too late. Nothing could have been done. It took years and years to get out of that depression, far longer than even FDR had that office right over there for a long period of time. The ramp system, that's rather intricate, was built because of him. And every time you walk up, you think of him. And he did a great job in many ways, but it lasted long beyond his terms, as you know. But it's not too late any longer. And we're going to start being smart, and we're going to start being very wealthy again. We're going to be wealthy as a country because they've taken so much of our wealth away from us. We're not going to let that happen. We truly can be very wealthy. We can be so much wealthier than any country. It's not even believable, but we're getting smart. Nearly a century later, in the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world. We pay for their military. We pay for everything they have to pay. And then when you want to cut back a little bit, they get upset that you're not taking care of them any longer. But we have to take care of our people, and we're going to take care of our people first. And I'm sorry to say that. And today we're standing up for the American worker, and we are finally putting America first. In Sleepy Joe Biden's last year in office, the United States hemorrhaged 100,000 manufacturing jobs, and the number was going through the roof at levels never seen before. And our trade deficit reached a record $1.2 trillion, which is unheard of. Since the beginning of NAFTA, the worst trade deal ever made. It was a horror show. I was able to terminate it. They all said you'd never be able to get it out. We had to get approval from Congress to get it terminated. We had to live with that deal. It was the worst trade deal ever made by far. But since the very beginning of NAFTA, our country lost 90,000 factories. Think of what that is, 90,000. Think about putting a map up and putting tax on it. You wouldn't have enough room. 90,000. I said, is that possible? We had it checked 4 different times, and it was actually somewhat higher than that. And 5 million manufacturing jobs were lost while racking up trade deficits of $19 trillion. That was the worst trade deal ever made. As a result of these gigantic losses, foreign nations now own $26 trillion more of American assets than think of this, than the Americans own of their own foreign assets or other foreign assets. The United States can no longer produce enough antibiotics to treat our sick. We have a tremendous problem. We have to go to foreign countries to treat our sick. If anything ever happened from a war standpoint, we wouldn't be able to do it. We import virtually all of our computers, phones, televisions, and electronics. We used to dominate the field, and now we import it all from different countries. A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate. We used to dominate it totally. In short, chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. I'd like to see the chart if you have it. Could you bring it up, Howard? This is our
S&P
great
500 is
Secretary of Commerce, Howard Lutnick. Thanks, Howard. So if you look at that,
back up to 87K.
China, first row, China, 67%. That's tariff
popped up to 88,500
charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%. So we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%. So we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually, they're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46% and much higher for certain items like cars, you know, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough.
Yeah, Bitcoin's going wild right
Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. Prime Minister of Japan, Shinzo Abe. He was a fantastic man. He was unfortunately taken from us, assassination. But I went to him and I said, Shinzo, we have to do something. A trade is not fair. He said, I know that. I know that. And he was a great gentleman. He was a fantastic man, but he understood immediately what I was talking about. I said, Shinzo, we have to do something. He said, I know that. And we worked out a deal, and it would have been a much better deal. But frankly, there were many years left on the deal that was made previous to my getting there. But it was something. If you look at Switzerland, 61% to 31%, Indonesia, Malaysia, Cambodia. Oh, look at Cambodia, 97%. We're going to bring it down to 49. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some
this is probably the first
bad things going on in South Africa. You know, we're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%. Thanks a lot, Art. He's doing a very good job. How's he doing? All right. I think you better take it with you. It's not going to last very long. He's going to put it, it's going to follow you down with the wind. I brought a hat just in case it got too windy, but here, would anybody like a hat? I'm not giving it to a cabinet. I'm giving it to the auto workers. Come here.
I'm laughing. It's just like,
thank you, fellas. Get it. That's it. That's it. They deserve it more than our cabinet. Our cabinet has plenty of hats. But you see the numbers. The numbers are so disproportionate. They're so unfair. At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate because the money is so enormous that you're talking about. There's never been probably anything like it in terms of the enormity. And there are a lot of bad things happen at the people that do the check-in, and they're looking at 10-year jail sentences if they do play. We're going to treat them so good, but if they cheat, the repercussions are going to be extremely strong. Foreign nations will finally be asked to pay for the privilege of access to our market, the biggest market in the world. We're right now the biggest market in the world. We had a great country 4 years ago in terms of the economics. We were doubling up on China. We were doing so well. Nobody was going to catch us, but so much of it slipped away over the last 4 years under Biden. I campaigned on this policy throughout last year, and today that promise was made, and it was also a promise, as you know, that was kept. Promises made, promises kept. To any company that objects to our common sense reciprocal tariffs, again, reciprocal, back and forth, back and forth. And I call this kind reciprocal. This is not full reciprocal. This is kind reciprocal. But what we do is we cut it in half. We charge them. My answer is very simple. If they complain, if you want your tariff rate to be zero, then you build your product right here in America, because there is no tariff if you build your plant, your product in America. And we've seen companies coming in like we've never seen before. Likewise to all of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs. I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe, which is a bad, bad thing and very devastating to us. And start buying tens of billions of dollars of American goods. Tariffs give our country protection against those that would do us economic harm. And many people were looking to do us economic harm. Maybe not so obviously, but they were doing tremendous economic harm. But even more importantly, they will give us growth. These tariffs are going to give us growth like you haven't seen before. And it'll be something very special to watch. I am so looking forward. And Brian, it's going to happen even faster than you said. You know, you might say, but it's already started. It's already started. Work's already begun on plants all around the country. And you see that as before. These are big, rich companies. We have $61 billion started on a big plant going up. It's going to be announced over the next 2 days, and they already started work. Many of these the biggest companies in the world, they've committed to build. We're going to build, sir. And they came here to see me, and wanted to know if they could have a press conference. I do as many as I can. I'm pretty busy trying to stop Russia and Ukraine and the Middle East. We got to stop that. We got to stop the Houthis, which we're making tremendous. They like shooting ships down and out of the water, sinking ships. They get a kick out of it, but they're not getting such a kick out of it now, are they, Mr. Secretary? They're not getting such a kick out of that now. But here are just a short list of some of the companies that have already announced and committed to investment. And this is a company that built its factories and its plants in China. Apple is going to spend $500 billion. They never spent money like that here. They're going to build their plants here. SoftBank, OpenAI, and Oracle, great companies, are investing $500 billion almost immediately. NVIDIA, a hot company, is investing hundreds of billions of dollars. They just announced. TSMC, the biggest, most important company in the world of chips from Taiwan, with no investment from us, is investing $200 billion. And they said the reason was, number one, the election of November 5th, and number two, the tariffs. They don't want to pay the tariffs, and the way they're not paying it is to build their plant here. So we're going to go from almost no percentage. We used to have 100% of the chip market. Now it's all in Taiwan. Almost all of it's in Taiwan, a couple of other countries, but mostly in Taiwan. And they're Think of it. We had 100%. We lost it because of people in that office that didn't do their job. They allowed it to be stolen from us. Johnson & Johnson, great company, $55 billion. Eli Lilly, $27 billion. Meta is investing $500 billion. Wow. DeMac is investing $20 billion. CMA, CGM, $20 billion. And then you have Merck and Clarios, Stellantis, General Motors, GE Aerospace, Honda, Nissan, Hyundai are all putting in billions and billions of dollars, and they're committed 100%. So, and we've never had, and this is after 2.5 months. This is after just a short, this all took place as soon as we came out with what everybody wanted to do. You know, I watched a gentleman today on television. He used to work with Lee Iacocca, a very respected automobile person. And he said, you know, because they're asking people, they try and get as many negative people as they can, but they can't find them too much. It's pretty hard to find in terms of what we're doing, especially when they see all this investment. They said, so tell me, what do you think of what Trump is doing from the automobile standpoint? He said, I can't believe it. Somebody is finally, he's an older guy, real pro, really top guy with Lee Iacocca. He said, I never thought I'd see the day when this would happen, where somebody had the courage to go and do what has to be done. This is transforming our nation. Our entire nation is going to be transformed, not only with the cars, but on every single other item that's built. We're going to become an industrial powerhouse. And he said that so beautifully today. In fact, I'm going to find out, I'm going to get a tape. And Bruce, I'm going to get that tape and I'm going to send it to you out in Long Island, and you're going to play it for the people and all your union workers and your non-union workers out there. You got a pretty even split. But we have, so far, it looks like we're going to have about $6 trillion of investments. And you wouldn't do that in years in this country over the last number of years. $6 trillion, and that's going to be much higher by the end of the year. And think of what $6 trillion is. You wouldn't have even a small percentage of that under this other system. We're going to be an entirely different country, and it's going to be fantastic for the workers. It's going to be fantastic for everyone. There will never have been a transformation of a country like the transformation that's already happening in the United States of America. It's an incredible thing to watch, and it's incredible to meet with the top people that you read about, very wealthy people or people that are great managers and executives and presidents of big public companies, and to watch the enthusiasm they have now that they didn't have. They gave up on our country. They went to foreign countries and they built. Companies are pouring into our country at levels never seen before, with jobs and money to follow, and it's really beautiful. In the coming days, there will be complaints from the globalists and the outsourcers and special interests and the fake news. Always, the fake news will always complain. But never forget, every prediction our opponents made about trade for the last 30 years has been proven totally wrong. They were wrong about NAFTA. They were wrong about China. They were wrong about the Trans-Pacific Partnership, which would have been a disaster if I didn't terminate it. If I didn't terminate that, United Auto Workers, you would have had no jobs in this country. You would have had no jobs. It was all going to other countries. In my first term, they said tariffs would crash the economy. Instead, we built the greatest economy in the history of the world. And again, I have great respect for President Xi of China, great respect for China, but they were taking tremendous advantage of us. And I commend them for that. I say, hey, if you can get away with it, that's okay. But, you know, they understand exactly what's happening. And they probably, most of them are saying it's about time they did something. But, and they're going to fight. They're going to fight fair. Everyone's going to fight. You know, it's like, I say to the leaders, look, you got to take care of your country, but we have to start taking care of our country now. We can't do what we've been doing for the last 50 years. From the day of my election, the stock market went up in my first term 88%, with NASDAQ going up 155%, more than any president has ever had in any term in office, by far. And I think we're going to blow that away. And maybe the numbers won't show, but I think they're going to show much better than even those numbers. But what you're going to see is you're going to see activity, that empty, dead sites, factories that are falling down, those factories will be knocked down, and they're going to have brand new factories built in their place. They're not only talking about renovating, they're talking about brand new, the best anywhere in the world, the biggest anywhere in the world. I have a friend who builds car plants, and I said, I want to see the biggest and the best. He said, well, we have to go to Mexico. I said, no, I want to see it in the United States. He said, we're not building them in there. This is a year and a half ago during the campaign. He said, we're not building it. You'd have to go to Mexico. When I was starting to decide to run, and I went to number one in the polls very rapidly, I want to say, like let's say in the first hour, and then shortly thereafter, it looked like I was going to win, and the fake news was saying, "Oh no, don't do this." What they don't know is if I didn't win, they would have really been in trouble, because nobody wants to read them anyway. But I tell you what, when it looked like I was going to win, I announced that I was going to be doing exactly what we're talking about today. Great consistency, actually, because I've been talking about it for 40 years, but because I saw what was happening 40 years ago. If you look at my old speeches when I was young, very handsome.
All right. Let's that's enough of that. Let me just go to the charts here to show you guys a little bit about what's going on. We'll get into a little bit of our last discussion here that I'll leave with you guys, and then we'll go into this other thing that I'll essentially leave you with. So, as you guys can see, looking at Bitcoin here, this had a pretty large run up and then a crash here. So this is really interesting. It wicked up, grabbed a lot of those different longs at 88K, and then just completely rejected. So this is looking at Bitcoin on the 4 hour. Really interesting stuff there. I knew that Bitcoin was going to make a move this morning just from looking at the volume, but that might have been it right there. We'll see what happens if there's any follow through. So while Trump was talking, the big issue, and I actually posed this question to our community members, was the big thing that's going to the biggest issue in the United States is demographics, right? So the old saying goes, demographics is destiny. Now, I'm not talking about racial demographics. I'm talking about population size. Because what is the biggest driver of growth? It's productivity. And if you have efficiency increasing with the number of people producing, that's how you get real growth. And pretty much since the 2008 Great Financial Crisis, what was driving growth was debt issuance, right? And as a result of that, it really displaced a lot of the younger generation that are coming up. Obviously, this generation is arguably doing less well than their parents for the first time in a long time, right? There's a lot of people who can't find steady work. The millennial generation, as well as Gen Z, they're pushing off owning a first-time home, especially post-COVID, when in a matter of 4 years, the prices of homes have almost doubled, and the median income required in order to purchase a home has gone from about $70,000 a household to now over $150,000. So a lot of there's a huge swath of Americans that have been priced out of quote unquote the American dream. I say quotes because that's not really the point of happiness, right? Anyways, let's go into this one census document that I found. And this is a population estimate and projection from the Census Bureau. And this was published in March of 2018 and revised in February of 2020. So essentially, right before the pandemic came out. I hope the Census Bureau does a revised update on this document here. And if you guys want, you can just look this up yourself. But I'll give you the synopsis here. So the bottom line is, by the year 2030, which, when this was published back in 2020, this is essentially a decade before 2030. Now, we're halfway there. By 2030, the US will undergo a major demographic shift. Older adults will outnumber children for the first time in American history. Immigration, not births, will become the main driver of population growth. From 2020 to 2060, the United States will grow older, more diverse, and slower in overall population growth. And so the population will grow by 79 million, reaching 404 million by 2060. Aging and declining birth rates will transform society, the economy, and caregiving needs. Despite slowing growth, the United States remains one of the few developed nations projected to continue growing through immigration. So, the answer to what's going on here is so the Trump administration and the Biden administration are trying to solve the same issue, and that's the issue that we're talking about right now, which is the demographic issue. Because if you don't have rising birth rates and the population is shrinking, guess what? You're gonna lose being the consumer power of the world. And this ultimately is how a lot of past enormous civilizations have crumbled, right? Birth rates decline, culture changes, all those different things. Central banking gets into play, currency devaluation, all those different things, which is what we're seeing right now. It's nothing new to it's nothing new to human history, right? And so it's not a surprise that this is happening because it's happened before, but it's obviously at a much larger scale now that we're here in the future. So let's go into a little bit more detail, right? So by 2030, all baby boomers will be age 65 plus, making 1 in 5 Americans at retirement age. That's crazy. Older adults will outnumber children by 2034, which is under 18, for the first time in United States history. So we're beginning to turn into Japan, if you guys haven't noticed. Population growth trends from 2017 to 2060. The growth will slow dramatically over time. So from 2010 to 2030, it's about 2.3 million a year. And by 2040, it'll be about 1.5 million a year. So a large 25% decrease. But from much updated numbers today, we're seeing the birth rate decline like crazy. I'll bring up some other demographic charts here in a second. So the aging population nearly doubles. What does that mean? It means that healthcare costs are going to go up. So things are going to get more expensive. Labor in the United States is still going to remain high, but now, so demand for labor is going to increase from the president's just now announced deglobalization initiative, right? So the United States is no longer outsourcing manual labor to foreign countries like India and China, which to me, it's kind of a good thing because the labor over there is basically slave labor. And so we enjoy all the cheap products in this country, but they're built off of extremely horrible labor conditions. So that's not a terrible trade-off, right? It's one of the things that Americans don't want to think about when we, look at our iPhones or computers. But that is the reality. But as an effect of that happening and all those jobs reshoring for manufacturing jobs, the prices of things are going to go way up. And so like the central bank, they don't have any other option but to keep rates higher. And so that's why this whole entire thing of going back to pre-pandemic levels and everyone waiting for a pivot, I really don't think that, I think that people are in a rude awakening because they think that the Fed is just going to, cut to zero again. I don't think they can. I really think that they have their hands tied behind their back. So, so yeah, I mean, inflation is going to continue to be a problem, which means interest rates are going to continue to be higher on average, and that also means that the financial markets are going to have higher volatility, which is why studying macroeconomic conditions and groups like ours are going to be even more important, because you're going to have to know a lot of this macro knowledge and indicators in order to navigate this crazy environment. From 2008 to 2020, that was like fantasy world investing. I highly doubt we ever go back to that ever again. All right, let's take a look at some of the aging population numbers here again. By 2060, nearly 1 in 4 Americans will be 65 and older. Looking at immigration, net national immigration becomes dominant after 2030 due to rising deaths and slower birth rates. Foreign-born population in the United States will dramatically increase. And so immigrants skew younger and more likely to be of working age. And so that's one of the reasons why the Biden administration was like, we got to get as many people, our population is collapsing domestically. We need to try and get people to come in here. Now, obviously, having them just swarm in here and we don't know who's coming, it's kind of like a bazooka to a problem where you need a very fine needle. I don't believe that was the right way to do it, but they're trying to solve this demographic problem. So yeah, let's go to where is it here? Your Denny charts. Let me see if I can find it. Where the heck? Oh, here we go. So this one research company as well called Yardeni Research. You can view this at yardeni.com. Really great website. They have this really interesting classification here called demography. So you have U.S. demography and global demography. So let's take a look at some of these charts here. We'll do births, seniors in labor market, and then we'll do global demography. All right. So let me see how these charts are coming out here. Let me know if that's better. All right. So this is the annual rate of change of births. Obviously, since it had a local peak in 2008, pretty much ever since the financial crisis, this has been drawing down, and yeah, it continues to decline. Now, this has reversed in the past, right? So we did have another decline scare from 1960 all the way to the mid 1970s before it reversed. So that continues to fall. Live births versus deaths. So deaths have been increasing as births have been declining. Had a large acceleration in deaths from the pandemic, obviously, which was horrible. Births minus deaths have completely declined. Let's see. Let's go to... So baby boomers are not retiring as fast as they would like to. A lot of them are remaining in the workforce. And so, yeah, this could continue to also crowd out some of the newer generation who are trying to get jobs. And so the labor force has pretty much dropped off since baby boomers began hitting the age of 65 back in 2010. And so, yeah, the labor force participation rate continues to decline. And this has been pretty much the overarching issue for productivity stalling in the United States. And so this is a genuine question, which I think is what, these presidents, they try and solve. But this demographic issue is the big issue that is kind of hanging over the entire country of the United States. And it's not just the United States. We're seeing this in other developed nations as well. Japan, Europe. Why do you think Europe has been completely okay with basically open borders? That is the left side of the political spectrum's methods of trying to solve this demographic issue, which is to just open up the floodgates. I don't think that's. I think it might solve. It might check a box on like a spreadsheet, but I think in reality that causes more problems than solutions. The other way, which is the right-wing way, which is completely, close off any immigration, and we're just going to like reshore everything. That is a more long-term play, right? So you're not getting the immediate effects of it, because essentially what would need to happen? Native-born Americans would need to start having more children, but there isn't really any incentives for that. Yeah, Italy, I've seen that. And that's why I sent out a tweet today, because what was interesting here? Yeah, so what I was saying here was, as deglobalization ramps up, a lot of these mega corporations that really got used to just out of whack profit margins, right? So they got addicted to the crazy profit margins that they've been enjoying, over the past 12 years, from 2008 to 2020. Inflation was low, interest rates were low, banks were lending like crazy, profit margins were skyrocketing, labor was cheap. We're now out of that era. And so what are these mega corporations wanting to invest in order to make sure that they keep those profit margins increasing? Well, they're developing these humanoid robots. They don't want to have actual laborers in the United States do the jobs that need to be done in factories and things like that. So my big concern is let's say, Trump is successful with manufacturing coming back to the United States, but actual jobs don't really increase as much as we all think that they're going to do. And a lot of them are taken by these humanoid robots, which I think this has a few more years to go, but obviously this is coming. Like, let's be real, right? And this is all in pursuit of these mega billionaires and these mega corporations wanting to maintain profit margin growth. And so, again, the consumer is the one who gets completely wrecked in this situation. If it was up to the major corporations and billionaires, they would have all, AI and robot workers, right? So labor costs go down to nearly nothing. It's all capex and return at that point. And then every single person in the United States who consumes, they just become like that movie WALL-E, and we all just get fat and, lay back in our chairs and just consume stuff all day. So the corporation's response to this deglobalization initiative and reshoring is, okay, we can't hire native-born workers, or as many as we want, in order to replace the type of labor that we were getting overseas. So we got to do robots. And so these are like the broader trends that I'm thinking about in the long term. And how can we use this in order to actually make money in the markets? Well, obviously, with inflation driving it higher, what's gonna go up, or what's gonna keep accelerating? You have inflation, commodities, I would say energy is going to continue to increase. So there's going to be a lot of companies that incorporate these things. And we really have to pay attention to which ones those are so that we can have exposure to them and at least have them help us maintain our purchasing power over time, so that when there's no more jobs because robots take over and, you know, we only have a few more years before, you know, John Connor comes and he tries to warn us and we don't listen to him, and then Skynet takes over. At least we have a retirement account. But anyways, kind of off top. I wasn't planning on talking about that during this live stream, and now we've been going over 90 minutes here, so we can go ahead and end it there. I got to go to the gym. But I work at a casino and they want automated car dealers. I mean, you have a lot of already just automated machines that deal as well, or they just make it all digital gambling. Yeah, that's true. The rich won't need us soon. All right, guys, as we get off here, as I would recommend, if you guys want to start, you know, learning about all this stuff and how you can make money, tracking all the macro data yourself, as well as engaging in our community, go to the link in my bio. For those on YouTube, you can go to the description below and start your 7-day free trial of our macro investing community. This is where you get exclusive reports from myself and the team. You see our current positioning on some of the example assets that were long, given the macro environment. Every single morning before the market opens up, before 9:30 a.m., I have a 5 to 7 minute exclusive video where I tell people what I'm doing before the market opens up, kind of my game plan for the day. So if you guys want to learn more about that and start your 7-day free trial of that, go ahead and take a look at the link in my bio there. But I appreciate everyone for joining here, and good luck out there, and we will catch you in tomorrow's daily macro wrap up. Bye, everyone. Have a good one.